Hi, Jennifer Yoingco of Texas Home Group. For the past 2 weeks, we've talked about buying a property. We discussed the procedures of acquiring a property, a resale property directly from its owner like FSBO, and obtaining a brand new home directly from a builder. For those of you who were able to procure their homes in cash, congratulations! All you have to think right now how to maintain your new residence. For those who were able to acquire their properties through mortgage financing, which is majority of us, right? Let me give you some important points to remember to help you just in case you experience financial hardship. After all, life is not a smooth ride. There will be bumps in the road, obstacles along the way. God forbid, but mortgage forbearance can save you from foreclosure. Today, we will talk about mortgage forbearance if it's a tool you need during this time. So let's explore it right now. If you are new to my channel, welcome. I talk about all things real estate, neighborhood tours, and tips that are useful to first-time home buyers, experienced home buyers, home sellers, landlords, and renters who are looking to relocate here in the greater Houston area. To better serve your needs, if you are a home buyer, click my online home buyers questionnaire down below. If you are a home seller, click my home sellers questionnaire. Now, on to our topic. A lot of people have been facing financial difficulty these last few months due to illness, death in the family, job loss, or reduced work hours. But according to Marian Siegel of Housing Counseling Services, by the way, this is a Washington-based nonprofit organization that helps homeowners with foreclosures, is located in Maryland and Virginia. And she said that not many people have stopped paying their mortgages or sought forbearance. This could be attributed to the temporary financial assistance that they are receiving from the government and organizations. They're simply not aware of what forbearance is and what it can do to help them out of their financial dilemma. What is mortgage forbearance? According to Investopedia, forbearance is a temporary postponement of principal mortgage payments. It is granted by the lender or creditor instead of forcing the property into foreclosure. Take note of the words temporary postponement. Many people make mistakes that this is a total cancellation or forgiveness of the loan in this time of crisis. Forbearance does not work that way. It only allows you to suspend or pause or reduce your mortgage payments for a specific period of time. You are still required to pay the missed payments after that period has passed. Take note, forbearance is not forgiveness. These are two different terms. Mortgage forgiveness, from the term itself, it means that your mortgage is forgiven and that you don't have to pay it back. This is typically associated with loan modification. Do not wait until you missed a payment before you call your lender. Contact them as soon as you realize that you are having financial difficulty that will affect your ability to pay. But you may also reach out to housing counselors, a certified housing counselor first. You can check the Department of Housing and Urban Development for a list of approved housing counselors. Choose a counseling agency that is not affiliated with the lender and provides advice and at no charge. They can assist you in finding out what you can afford by helping you analyze income and expenses. Remember that forbearance is non-negotiable once finalized, so it is best that you are aware of what you are exactly getting into. By the way, disclaimer, I'm not a licensed loan officer. This video is for informational purposes only. Call your lender regarding your specific needs. It is best to have a clear understanding of the repayment terms. Common options include paying a higher amount, monthly amount, in a specified period to make up for the missed payments. You may also choose to pay the entire missed amount once the forbearance ends. How does forbearance work? Again, do not wait until you miss a payment. Call your lender right away or consult a certified housing counselor to help you assess your financial situation. Qualifications often vary depending on your servicer. But how would you know if you qualify for a mortgage forbearance? Check if your mortgage is backed by the Federal Housing Administration or FHA, Veterans Affairs or VA, or Agricultural Department or USDA. Borrowers of federally backed mortgage loan are qualified for up to 180 days of forbearance in this time of crisis. All you have to do is call your servicer or lender and to explain your situation. What if you do not have a federally backed mortgage? Then your loan is not covered by the CARES Act. But do not fret. Almost all private lenders or mortgage providers are offering a forbearance and loan modification program of some sort. All you have to do is contact your loan servicer to see what options are available for you. Most often, the options will depend on the type of loan you have. Your servicer will then work with you to set up a forbearance agreement. It is important to have a black and white documentation that outlines the terms and conditions of the agreement that includes the following: the length of the forbearance period, the amount of payment required, stipulate if the lender will report the forbearance to the credit bureaus, how payments will be made at the end of the forbearance period. Under normal circumstances or situations, forbearance can affect your credit score unless your lender agrees not to report it. However, at this time of crisis, it will not hurt your credit score as a negative activity. When the forbearance period ends, you will have to repay the lender according to the previously agreed terms. However, if you feel that your financial hardship will last longer than expected, you may ask your lender about a mortgage loan modification. This will help make your payments more manageable by changing the terms of your original mortgage. But if you have a federally backed mortgage, you can request for an extension of the forbearance up to an additional 180 days under the CARES Act. If you can make your monthly mortgage payments and have stable jobs, I suggest not to apply for mortgage forbearance. Why? Because if you plan to sell your home and buy another home, because of the forbearance you took, you have to wait for at least 3 months, meaning you have to have 3 consecutive timely payments on the mortgage once the forbearance is released before you can get another loan. This is the reason that forbearance is not a benefit to all folks. The banks are not explaining these consequences. So make sure if you plan to sell your home or current home and want to buy another home as soon as possible, right? And can afford not taking a forbearance, then don't do it. To summarize, being hit by financial hardship is hard, especially in this time of crisis. But remember, there are people who can help you solve your dilemma. Talk to your housing counselor, your financial advisor, or your lender. Check your options. You cannot just decide to stop not paying your mortgage. It will greatly affect your credit report, and worse, you end up in default. It pays to be knowledgeable. If you have learned something new today, I invite you to subscribe to my channel and hit the like and notification bell. Again, this is Jennifer Yoingco. You are my priority for anything real estate and your guide to greater Houston living, serving Houston, Tomball Spring, and the surrounding cities. I'll see you next Tuesday. Bye!